Hello to everybody, our dear subscribers. FutureTrend channel is ready to present our point of view of how to trade major currencies in the world financial markets for the date of 27th of November 2018. The market at the moment is trading more or less sideways at the foreign exchange market, and probably it should be understandable from the point of view that major events are scheduled for the end of this week, and among them a very interesting meeting between United States and China president regarding future trade cooperations between the countries, and the last comments from the part of Donald Trump, the president of the United States, that it's the United States still ready to impose a new round of tariffs against probably the entire import of Chinese goods into the United States starting from the beginning of 2019, and probably in that case another 200 billion of Chinese goods will come under the so-called sanctions. Anyway, the tariffs for them will be hiked from the level of 10% now to the level of 25%. Probably during this week summit, J20 summit, that's scheduled for the November 30, where the Chinese and the United States president could meet. Probably during this meeting they will try to calm down a little bit the increased nervousness regarding the situation. Anyway, now the situation is still unresolved, and we should understand that such kind of tariffs for such kind of bigger imports, for the lion's share, let's say, for the entire imports of Chinese goods into the United States, for sure could let's say put under the pressure the state of the world economy. And probably this is the matter that could be discussed by the Fed's president Jerome Powell during his appearance tomorrow. That's also a very important economic event of this week, especially after some of members of the Federal Open Market Committee also expressed some concerns regarding the state of the world economy and its possible implications for the United States economy. All in all, now the situation is the market is more or less priced in December hike from the part of the Fed, but the pace of tightening for 2019 is still under the question, and probably that's the most important matter at the moment for the market participants. How fast will be the Fed during its tightening cycle in 2019? And what else? From technical point of view, let's see the situation. From technical point of view, the euro-dollar is looking a little bit stagnated. We are sorry for our internet connection, it's really very shitty at the moment. Let's not show the graphs to you, but let's speak blindly. And for sure we should understand that euro-dollar is more or less stagnated at the moment, and also because of a row of really bad European economic indicators, the euro-dollar should remain under increasing selling pressure. Anyway, we suggest that the level 112.20, 112.15, where by the way located the lows of this year, should present a buying opportunity in case of revisiting of these levels. That's why you are still seeing that we are ready to rebuy the euro-dollar on a possible downtick to 112.20 with a stop below 111.70. Don't forget that around 111.85 lies the Fibber retracement level of the entire up move in the euro-dollar that we witnessed during 2017, beginning of 2018. As regarding dollar-yen, we still really very surprising how resilient dollar yen is at the moment, despite of the risk aversion increasing situation, also because of trading relations between China and the United States. But of course, the main beneficiary of this process is the United States currency, and probably because of that, the United States currency has at the moment a status of so-called safe haven currency, and for us it's really very surprising, taking into account, for example, the twin deficit of the United States at the moment, at the highest one for the whole history of this country. And what else? Sterling, as we already told during our previous reports, should be more or less range bound, inside of the range till December 11, when the British Parliament will decide for or against the so-called Brexit deal. As regarding the dollar Swiss, we still suggest that it's a sell on any kind of rallies. Sell on any kind of rallies closer to the parity level. That's why we suggest to sell it at exactly at parity level, adding at 101 with a stop above the highs of this year. Excuse me once again, dear subscribers, for our connection, internet connection, and for the problem we could not present for you some kind of charts. Anyway, thank you and see you tomorrow. Take care and bye bye for now.